Hey climbers, welcome back to Climb by VSC, a weekly show about building and scaling startups in the world of climate innovation. My name is Jake Kapoor, general partner of VSC Ventures and co-host of Climb. Every week, I or a member of our VSC team will speak with a pioneer in the climate tech world about emerging technologies and novel ideas that will turn the tide on climate change. We've all heard enough of the doom and gloom. It's time for stories of purpose-driven innovation that lead to sustainable, positive change. As always, I'm so happy that you've decided to join us. Now let's climb.
Thanks, everybody, for joining us for another episode of Climb from VSC Ventures, where we bring on some of our favorite company builders. Today, we have on Arvind Gupta, partner at Mayfield and founder of IndieBio. And his scope is two things. One, reversing climate change and aiming to cure disease through his investments. And he focuses on human planetary health. So I want to welcome you, Arvind, to the Climb podcast.
Thank you. It's great to be here. I appreciate it.
Yeah, and I've had the privilege of knowing you now, I think, for 16 years. I came into the SOSV office in San Francisco, and I still remember you were the first VC I met that was wearing scarves like consistently, and I was like, "That's a good look. Like, I'm gonna get my scarf game up leveled at this point." So that's when I remember you, and of course, since then you've been building so many important parts of our society to build companies and help founders solve those two problems you're going after. So I just maybe talk a little bit about like your early career path, and then how did that get to IndieBio, and then maybe tell us a little more about IndieBio itself, and then we can get to Mayfield.
Yeah, sounds good. I mean, it is like Renaissance is an interesting word. It's really following curiosity to its logical end, and then where it ends, it kind of naturally branches into another direction. And so there is a logical thread that connects my entire career, but it's non-obvious unless you get the backstory. So it's kind of interesting. I started in college at UC Santa Barbara. I was studying microbiology with an emphasis in genetic engineering. So it was the first genetic engineering program. It was back when genetic engineering was really more a set of protocols than it was a set of technologies. And so the idea of reprogramming life to do something that is useful to people was enormously powerful as a concept, right? But because it was a set of protocols and not a technology, it was also impossible to implement on a short time frame. So you could have an idea, hey, which I had an idea back then. What if we could engineer our gut microbiome? E. coli was what we knew back then, to express the enzyme cellulase, which breaks down cellulose, which is in plant stalks and things like that, the wood. Then we could cure world hunger because we could all just eat grass and eat sticks for nutrition, which obviously isn't really correct. There's a reason cows have 4 stomachs and all that kind of stuff. So there's a lot of problems with that. But the idea that general line of thinking of what can you do if you could reprogram life sent me into that direction. But the fact that you couldn't actually implement that idea with any time frame that was short of 5 years made it impossible for me to want to pursue. And I had studied economics at the same time because I was interested in self-assembling systems. DNA is one of them. Life at its core is another. And so economics is like a meta version of a self-assembling system. And that got me interested in macroeconomics. When I decided I couldn't be a genetic engineer practically, then I was like, oh, what do I do with my life? And the first of many times I'll say that. And that led me to say, okay, well, I know macroeconomics. I could maybe trade options based on that knowledge. And so I moved to San Francisco and stood on the steps of the exchange. And everyone that came out, I was like, hey, give me a job getting coffee. I'll get coffee for you. And they're like, one guy was like, sure, I can use someone to get coffee. It was 4 a.m. because it's on East Coast time. So, no one wants to wake up. So I woke up at 4 a.m. and got on the floor and started to learn how to trade and became a market maker and got to watch the entire .com implosion, but from the inside of the exchange. So like it was open outcry back then, like in trading places, if you've ever seen that movie, and like, you know, you hear a crowd start roaring, you're like, oh, there's WorldCom, it just blew up, right? Yeah, so anyway, I realized that making money without creating any value was a soul destroying activity. That's what I learned from that time. So for the second time in a few years, I was like, well, what should I do with my life? And this time I decided, okay, well, we'll go first principles, do nothing, whatever it is that you do when you do nothing. If you could get paid to do that, just enough to cover rent, you're on vacation for the rest of your life. Because a lot of people work to buy their own time back. Anyway, a digression. So I did that. I made enough to sort of do nothing for a bit, and surfed and climbed and base jumped and did all those things that I used to do. And a friend who was teaching how to base jump was like, dude, you should be a designer. And I was like, oh, it's like blending science and art and solve problems. Okay. So that's where I did the master's in industrial design. IDEO hired me out of school, and I became a design director there, working on really kind of the gnarly technology problems. Designed the Samsung Galaxy Curve and a bunch of other things, but always building businesses through product. In the long run, that's what it was about. And that became the framework through which I now live my life. Everything is about building businesses through product. And that product solves a simple problem. So I live my life looking around for problems. And those problems lead to business through product. So after doing that for a decade, I realized my wife did a startup and I supported her. I got to watch basically and realized that you can go from an idea to launch in 2 months, and then people could be emailing you as a fitness startup like, oh, hey, you changed my life. And I was like, wow, no one's ever emailed me that I've changed their life. Like, and I've done all these things that are, you know, supposedly really great in the design world. So long story, you know, getting shorter, decided to go into venture, but with a very different point of view than most people going to venture. My love for genetic engineering had never waned, and I had always watched the space. In the 20 years that had ensued, the ability to actually do genetic engineering became a technology, and it became fast and cheap, like super fast, super cheap. You could order DNA and it arrives in the mail the next day. You know, you could do PCR very quickly and very deeply. Like it became obvious that this was a technology that was whose time had arrived, and no one was financing biology as a true platform technology. Most people are financing biology as a means to make therapeutic drugs for people. And so I thought, okay, what are the biggest problems in our world? Well, climate change. And this is 2013 was when I made the switch. So 2013, people were still doubting climate change, even more than now, if that's possible. And so I believed that it was a real problem. And biology is very uniquely suited to solving it, because it's a problem of efficiency. And biology is very efficient, and so we can reprogram biology to make the other things we need more efficiently. So I thought, okay, well, what's the best business model to be able to do that? And the idea of taking the most expensive part of a biotech company, which is the lab, and turning that into shared expense, which is a centralized lab, and running an accelerator with many, many companies at the same time where they share that expense, was a way to drop the capital costs and turn it into operating costs for these companies. And now you could finance these companies for a lot less money, which means you could take more risk on what they're trying to accomplish. So that led to the creation of IndieBio when I joined SOSV as a GP. And Sean O'Sullivan, I mean, what an amazing guy, right? Like, he had the vision. He funded it out of his own balance sheet. Right? He was a family office when I joined. And he had the vision to see that this would be possible as well. And so I joined Sean to build this, and started the San Francisco office. And it was the right place, right time, right team sort of thing. We set this up. who knew what was happen? Like maybe we would say, okay, applications are open, we get nothing. It's like, okay. Instead, I remember an application for egg whites without the chicken. And I was like, this is going to work. That was Clara Foods, now the Every company. And because it was exactly the thesis, reprogram life to make things more efficiently and reduce the overall resource burden for those products. So then did Memphis Meats, and now called Upside Foods. That was cell-based meats, and Myco Works, making leather without the cow, using mycelium. So, it goes on and on. Did many therapeutics companies as well. Then built the New York office to be able to expand the operations, to be able to expand the amount of companies that we do. And really built a community as well. I think the community aspect is overlooked oftentimes. You really do need to build a movement alongside just building companies. Now, the companies being successful helps build the movement, but giving the movement a place to convene, which was the lab, the event space at SOSV and IndieBio, was very, very helpful. So at some point I became, very much managing all of these things, but I didn't get to build these businesses through product with the founders as much. And that was gnawing at me. And so I met Poe Bronson, it's got to be 7 years now, many years ago. And, he's just he's an author. He was also a bond trader. No one really knows that prior to that. And amazing guy. And so he was helping with the teams with their pitches and stuff. I was like, dude, here's a key. And then he stuck around, and then it was like, could I pay you to stay around? He's like, yeah, that'd be great. So he came on, and Poe really, we wrote a book together, and I knew that he is as passionate for IndieBio as I am. And he had the mind to be able to take it to new heights. And that would free me up to say, hey, Sandhill Road, wake up. We could make venture returns, huge amounts of money by investing in climate change, in curing disease, as you can software. And so made the transition to Mayfield in order to do so, and working with my partner Urshit and Naveen and the rest of the team here very closely. And it's been phenomenal, being able to now work very closely with very few teams and really deploy my entire network into those very specific problems. That's what I was craving. And meanwhile, Poe is taking IndieBio to an incredibly, amazing place that I wasn't able to. So I think it was the right thing to do for everyone involved. So yeah. So now I focus on Series A at Mayfield.
Very impressed with what you were able to build at IndieBio and what's continued to grow there. It's by far one of the most important brands and hubs and communities in this space. It has to be stated as such. So
thank you.
Thank you for all of that growth. So with that, last I checked, there's over close to 136 companies, maybe more now.
More like 200. More than 200 now. I think 200 a batch.
yeah, true. Good point. But then you're going to a place now where you're like, maybe you'll do 1 or 2 deals a year, right?
Yeah.
Or 4. What did you learn from that 130 plus when you were there to now picking the 4 that you would do here? What's the difference?
A lot. Well, I think one is at IndieBio, what you remember the premise, lower the cost of risk to a point where you could take the risk without going out of business multiple times. I got to learn through experience with no one looking over my shoulder, which means I had full responsibility for all decision making. And so you learn very quickly that way. And, when I made the transition in 2020 when everything went nuts in the markets, right, during COVID. And I could only imagine how confusing and hard it would be for someone that didn't have a lot of pattern recognition, because I'd look at some of these companies and say, like, I think you're great, but look, you're not as far in terms of the de-risking to really make what you're asking for a good investment.
Yeah.
I passed a lot. And it was hard, but now we're on the other side where the economic climate has changed, and a lot of things that I had learned from experience, raising more than you need, but at a higher valuation that you can support, creates a condition by which execution has to happen perfectly, and no changes can be made to that. Well, so there's something called the coffin corner. I'm digressing pretty hard. I hope you don't mind. This is a little bit nerdy, but there's something called the coffin corner in aeronautics. And the coffin corner is speed and altitude at which an airplane, if it stalls, the forces on its wings cause it to rip off. And if it goes too fast, the speed on the wings cause it to rip off. Well, there's a speed at which there's a point at which those two speeds meet. And that's called the coffin corner. That's why it's called the coffin corner, right? If your speed goes up by 1 mile an hour, you die. Down by 1 mile an hour, you die, right? And that's what raising too much does at too high a valuation. Everything has to execute perfectly. And very few people think about the actual airflow changing. Like you think about the plane, right? So there's just no room for error. And I think a lot of, so I avoided the coffin, I avoided the coffin corner. Mayfield avoided the coffin corner. And that, so these are just some of the learnings that it took back. But like, I think, the types of founders that tend to succeed, there's a lot of, many podcasts of content around, just the takeaways from IndieBio. But I think the biggest ones are scientists can actually are great entrepreneurs, that biology can actually be applied to multiple fields. The cost of biology can be a lot lower than people think. And I think that's important. That for me, the greatest, I think, thing that IndieBio has given, or has the biggest change that IndieBio has helped create, is that scientists that don't have the standard pedigrees and the standard network, more importantly, the LinkedIn network, like the people that are connected to the club, can get a shot. They can actually succeed and create billion-dollar-plus companies, because they have now through IndieBio.
In that process, are there any other like odd or interesting or predictable patterns? Like second-time founders, how much less risky are they? Where are they based? Do they need to be close to you? Can they be anywhere?
It's an interesting question on the location. So for IndieBio, I made it a rule that you had to come to the basement. IndieBio is in a basement, the lab. You had to come to IndieBio for the 5-month program. You could then go back and live wherever you want, but you had to be on site every single day for the program, or you cannot get in, no matter what. And that made IndieBio an amazing, vibrant, energetic place. But more importantly, what it did, several things. The founders learned from each other. It created community. I was able to, me and the team, the IndieBio team, were able to work with everyone directly on a day-to-day basis, brushing up against them. And that, I think, is more important than anything else. The ability to like real-time work on business model design, real-time work on go-to-market motion and strategy, things like that, to get to that demo day deadline where they're ready. So that was all pre-pandemic. And that really shaped how I work today. And the reason also was, if you wouldn't move, if you couldn't like turn your life upside down for 5 months in order to have a shot at achieving your dreams, I'm not sure the dreams are really what matter to you, right? So it was a forcing function. It was a test, right? Do you really want it? Because of the pandemic, IndieBio went remote for the first time, and it turned out that Poe was able to figure out how to run IndieBio even better through Zoom. So both sides work. For me, the reason it was so important and impactful is now at Series A, I focus on Bay Area companies, because it is that very tight involvement and that mind share with the founder, and that really roll up your sleeves and work with them and help them in any way, shape, or form. I find that high valence and low latency type of relationship could only happen if it's local. I should hesitate to say only, but I'm worried that I can't do that if it's like someone in Boston. It's a bias that's been built into me because of IndieBio, for better or for worse. So that's the answer to the location question.
Yeah. And I'm seeing a bit more of a reversion back to the core after COVID now.
Yeah.
It's real. It's not just corporate real estate lobbying, but like it just seems to be. You've seen the money coming back to certain areas. Like I don't know if you saw the stats recently, but the amount of venture deals done to Bay Area companies further separated from all other cities in Q1. And maybe that was part of OpenAI, I don't think, but still, it seems like there's a reversion back to core locations.
For deep tech, it will be much harder to move to places like non-traditional tech centers because the talent is way sparser. So like in Austin, it's easier to find a front-end web developer. Even in Ohio, whatever, you could find front-end web developers. It's going to be really hard to find a metabolic engineer, in some place random. Like they're gonna be associated with the top universities in San Francisco, LA, New York, Boston, right? So I think for deep tech, it's going to stay near these universities for a very long time. Tel Aviv, right? And traditionally you've seen that, and I think it'll continue.
Let's talk about sort of milestones now for the sort of at the Series A, right? So, are you, by the way, are you doing any seeds as well? Or are you doing?
No, I've done seeds. I'll write checks from 2 million, 3 million, from 3 million to 15 million.
Okay.
So the state, seed Series A. I mean, the real distinction to me again is risk. So if it hasn't been de-risked very much, then you lower the amount of capital at risk, right? Because you're managing the cost of risk, not the chance of risk, right? Or the cost of failure, not the chance of failure. So all things can fail, but if you can show that, hey, it's less likely to fail, it'll be a larger check. Anyway, continue, please.
No, that's really helpful. But I like this cost of failure versus cost of risk thing. I will TikTok that for sure.
Yeah.
But
well, it comes from base jumping, right? So when I was a base jumper or a rock climb, I climbed El Cap. I've done, I've managed risk my whole life, and so, in base jumping, to the outside person, it seems very binary. Oh, you live or you die. Well, it's actually not true, right? There's a lot of variables that happen. Parachutes are made to open. Like your parachute's generally not going to just not open. So what is it that you're managing? Okay, what's the wind like? Right? What are all these other factors and variables that goes into, hey, do I make the jump or not? That's just like making an investment, where the difference is the chance of outright failure in base jumping is a lot higher than in the chance, But yeah, no, in Series A, if your companies don't do well, eventually you won't have a job.
Are there different goalposts now? For your what will be investable this year versus at ZERP?
So I'll answer your question with a preface. The goalposts are the same. In other words, my goalposts are to invest in radicalized founders with a unique insight into a problem that, if solved, will make world history. That's my goalposts. So that hasn't changed. Again, everything I've invested in has high technical risk. In my managing of that risk, has my decision-making changed? I think I've always been of the mindset of reality and being not taken up by the FOMO that swept the valley in the last 2-3 years. So nothing has changed for me. I think everything has changed for everyone else. And so and I think because we're an ecosystem, venture capital is an ecosystem of all these different investors that are doing investments at different stages, the goalposts for the companies have changed, right? In terms of what the milestones they need to hit in order to hit a certain valuation, right? Yeah. So that has definitely changed for everyone else, but mine has always been stringent.
What's happening in the venture market on your side? How is the B? I mean, that's the next milestone up for you.
Bees are hard. Bees are right now. I mean, mid-May 23, the Series B market is fairly frozen. Don't know if that'll change in the near term or not, but it's very difficult out there from what I'm hearing. None of my companies are raising right now. If you're a high capital cost company with years away from revenues, I think it's going to get a lot harder. What's changed in the world is interest rates went up, so the cost of capital went up, so other investment opportunities are more attractive. So therefore, venture capital sees less, right, of the overall pie. Another way to say it is if interest rates are zero, then your future returns expectations are zero. So any risk is worth the reward, right? That's changed. So yeah, I think that's the mechanism by which things open up a little bit. I think also the other thing that opens it up in the other direction is everyone starts making money, right? Like the economy continues to go extremely well, or the economy gets better than it is today without inflation. And we stick around like this 3 or 4, and we hit this Goldilocks sort of situation where everyone looks around and says, okay, well, carrying cost of capital is higher, but everyone's generating revenue, so we can look forward again, and we want to invest in these forward-looking technologies. Those are the two ways I see it happening.
What are areas you want to invest in right now that are going to help reverse climate change or cure disease, like specifics that you're excited about, you're learning about, you're reading about? And then what kind of traction do you want to see right now?
Right when ChatGPT was released, I was using it, and I had known some people on the red team as GPT-4 was being developed, and spoken with some of the people at OpenAI about various things. But that was obviously an enabler. It was as obvious to me back when I was doing genetic engineering. It was like, this is so obviously a society-changing technology. I have to be part of it. It took me 20 years, but here we are. I had that same feeling when I was starting to use ChatGPT 4, and I think, or 3 when it was released, and it continues to go. So I'm looking for companies that are using these new large language model techniques to reverse climate change and cure disease in any way, shape, or form. Some areas, by and large, I don't really care about technologies. I don't care about anything. I care, one, that you're a founder, that some event in your life has radicalized you to solve the climate change problem or a specific disease problem, where you will work to no end to solve that problem, not necessarily for financial gain, but because you have a personal relationship with that problem. And it manifests in you wanting to solve it through business, right? And I will support that person with the same passion and fire, because that's my mission in life. Generally, I want them to have a unique insight into a very specific problem, right? Like I said before. And that means they have an angle. Oh, okay, everyone thinks this, I see this. Then that problem has to be a keystone to a larger industry problem that if you solve that, everything changes, right? So it's all risk. So let's make it worth something. Let's go try to truly move the needle on history. I have a list of problems that I have on my phone that I'm constantly looking for solutions to. Right. So taking waste products and making them circular. So Windfall that I just did with Josh Silverman is a great example of that, taking waste methane from farmers and using that to convert it into organic fertilizer and creating a franchise business model where that becomes a windfall of cash for the farmer so they could have a new source of income to help make farming profitable. Right? And in the meantime, if every farmer starts to implement this, you have a decentralized manufacturing network for organic fertilizer to promote food security in the country. So these are that's a specific problem, but it ladders out into this really interesting change if you play the chess moves out.
You have a TiCon talk. What is this? It's about building scalable, defensible post-silicon systems. Did I get that right?
Yeah, something like that. Yeah, I remember the title. Yeah, something like that. Yeah.
Okay, what does that mean, and how do you do it?
The short story is, for us to reverse climate change or cure disease, you have to be a business that disrupts the status quo. Because the status quo builds things unsustainably. So if you can't build things in a way that's sustainable for the planet and also sustainable as a business, then you're not going to create any change. Okay, great. So how do you do that? Well, I've identified a bunch of financial metrics that you could use as a lens, as a set of lenses into the viability of your business over time relative to the public markets. And, at every stage, the private investors are looking towards the public markets for guidance on what they care about. At seed stage, it's so far away that you're kind of like, it could be big. Like Series A, like good team, it could be big. Series B, okay, give me some financials. Series C, really give me some. Series D and E, they're talking about IPO rounds, right? IPO, they're talking about, okay, quarterly revenues, right? So it always goes that way when you think about it. Great. So what drives everything on that end? And then how do you bring it back? And so you could structure the beginning of a company at the inception stage with that destination in mind, and that's what I do. Some of the principles, like what can I give you in a short amount of time that would matter? Okay, here's one. So one of the fundamental laws of the physics of business that I think about daily with the companies I work with is the physics, velocities of cash flow. So all businesses have cash in a bank. They spend that cash to turn it into inventory. They spend more cash to turn that inventory into accounts receivable. And then the accounts receivable turns into cash in the bank. So that's a loop that all businesses have. I think that the companies that can move through that loop the fastest in any given sector generally have the highest multiples and the winners. So it comes back, how do you improve velocity of cash flow through the loop? Thinking of all ways. And that leads you to fundamental business model design. And that's like things like Tesla's, having recurrent fees and their navigation system, right? So I'm not just buying a Tesla, I'm also going to be paying you for other stuff, right? So I think like these are little things that improve their velocity of cash flows on something that you would think is slow, a car, right? So not only is their velocity of cash flow higher, but then the car market is giant, right? So their TAM is huge, and they're getting good penetration and good velocity of that penetration. So they become the most valuable car company in the world very quickly. That's what I'm talking about.
I know we're up at our time. I could talk to you for hours and days, and I will in the future.
Yeah.
I really want to thank you for being on our podcast, Arvind.
Oh, you're very welcome. It's an honor to be here. I appreciate what you've done, Vijay, and thank you for helping, all these companies tell their stories. I think without that, if a tree falls in the woods sort of thing. So.
Yes. We're trying to plant those trees. But yes, when they fall, people should know.
Yes.
Arvind, always great to see you, man.
Much love.
Thank you. We'll get drinks in real life soon.
That'd be great.
Thanks for being on the podcast.
Well, that's all for this week's episode of Climb by VSC. Thank you so much for watching and listening. Special thanks to Credo for their help in producing and promoting this episode. To visit any part of today's conversation again, you can find the full transcript on vscventures.com. Our thanks to Josue Ramiro for posting these every week. Lastly, if you've listened this far, please leave us a rating on Spotify or review on iTunes. It only takes a few seconds, really helps us out, and as far as I know, it's still carbon neutral. Well, that's all for now. We'll see you all next week on Climb by VSC.